Hey everybody, Jason Wood here, VA loan guy, host of the Armed and Ready podcast. We have an exciting episode for you today. We have Jay Johnson as our guest, and Jay is a Navy veteran. He's also in the real estate business in San Diego, which is kind of the mecca for all things military. So I'm super pumped to have someone we can talk a little shop with. We can get into some real estate info and just help kind of fill you guys with some knowledge on what's happening today in the market and dealing with COVID and how you get from being in the Navy to selling real estate and all that stuff. So without any further ado, please help me welcome Jay Johnson. How are you, Jay?
Hey, I'm doing well. Thanks for having me, Jason. Appreciate it.
Yeah, it's great, man. Great to have you on the show. We have a lot of really cool guests on here and with really neat backgrounds and stories. And so I always like to start off with everybody and get an idea of how you ended up in the Navy. You know, what was going through your brain when you decided to raise your right hand and sign up. And tell us about your Navy career. I think you're a rescue swimmer.
Correct. Yeah. Yeah.
Cool. Yeah. So how'd you get in the Navy? What was the motivation there?
You know, probably like quite a few of my friends. I was in college, and my main focus were playing some sports and drinking beer. And at some point, you kind of have to decide which direction you're going. I wasn't really ready for a real job. I didn't have, I wasn't in a military town, didn't know that much about it. And just kind of took that jump after a couple years and was the intent of doing, my 5-year contract, get some experience and, experience something different and then get out and get back to life.
That's cool. So where did you grow up?
In Virginia, but like in Roanoke, so Southwestern, way away from like Norfolk and all that, all the military stuff. So not a lot of experience with that.
Gotcha. And so obviously you probably got stationed out here in San Diego once or twice. And
yeah. I was fortunate to end up most of my career home based out of San Diego. So pretty fortunate with that. Yeah.
Yeah, you lucked out. That's really cool. Well, I have a friend who's a Coast Guard rescue swimmer, so I've heard some interesting stories, but I would love to hear a couple of cool stories about what you do. And I don't know if people that are listening, unless they're in the military, even understand like what your job was. But I mean, essentially, you're one of the guys that jumps out of a helicopter into the ocean to rescue people, right?
Right. Yeah. Part of the time. Yeah. That's the fun part of it. A lot of it's kind of like an insurance policy, a lot of training and boredom, like you're paying into your insurance for a little bit of fun, fun times, but yeah, that's kind of it. That's how we all start. And, obviously helicopters, and we start as rescue swimmer. And I was fortunate. My second station was at Whidbey Island, Washington. So I got to do mountain rescue. So we got to do all the rappel and glacier and, high altitude rescue. So that was really cool. I was really fortunate for that. And then you kind of just go to different things from there, if you stick around long enough, you go do other things, a couple deployments to the desert. We did air ambulance. The jobs just kind of compound. So you get to do a lot of really fun stuff. And I think that's how I ended up sticking around for so long, because it wasn't my intent, but I was having fun. So it worked out,
Yeah, getting paid and having fun. How long were you in?
26 years.
All right. So you went the full road, huh?
Yeah.
Good for you, man. Well, thank you so much for that service. So I'm deathly afraid of sharks. So any shark encounters or experiences?
I mean, I've seen plenty, probably have been in the water or something, nothing crazy. Yeah. Nothing like that. No.
All right.
No, as long as I can outswim the other guy, we're good. Right.
That's right.
No, nothing like that.
Okay. Nice, man. Well, so you transitioned obviously into civilian life. Did you go straight into real estate after the Navy?
I did, kind of. I got my license near the end of my time, but I initially did it for myself to get into investing more, and thought I would do, a little bit for here and there for friends or something. It wasn't really intended to be, kind of like my Navy career. It wasn't intended to be a career at first, and then just kind of transitioned into it and grew from there.
Nice. And how long have you been in real estate now?
Full time, it'll be 3 years in like next month.
Okay.
So, but I've been doing it as a business for 3 years. I first went to real estate school, 26 years ago or something, after I bought my first house, but not to do it as a profession, but just for the experience, because I knew I wanted to continue investing in it while I was still in the Navy as well.
Yeah.
Yeah.
Now, did you buy any homes or use your VA loan while you were active duty?
I did. I've used it several times. Actually, the first home I did not. Honestly, I didn't even know that it existed on my first one. I was like 22, 23. So that one, no. Second one, I did use it. And then I believe the third one I didn't. And then ended up getting divorced and kind of offloading all those, but then got my VA loan back as you know, and I used it a couple more times since then. I believe I used it at least 3 of the times on properties.
That's cool. That's cool. Yeah. I'm a big proponent of, educating, especially those that are active duty, on the benefits they have with this cool loan program. It's truly unique. I mean, obviously, we serve, so we have earned the right to have this loan, but I think there's such an opportunity for guys and gals who are active duty to really create a lifelong investment, a great investment.
Absolutely.
As they're serving, by using this loan. What has your experience been with kind of helping active duty people and leveraging this?
It's initially kind of just as a mentor side, as I was getting along further in the military, I would just kind of almost beg the young guys, like, guys, just buy something. I don't care if you 2 of you buy it together, just buy stuff, just get in the game. And quite a few of those guys, they do. Sometimes, these guys today are smart, man. And there's so much information different from when I started, so if they have the drive and they do just a little bit of legwork to kind of see what's out there, they'll come back with some great questions, and you're like, okay, these guys are on track. And they'll, several of them executed and have already started building some pretty good portfolio, or done well even just for their families of building the equity when they transfer, they were sold or turned it to a rental. So it's pretty cool to watch those guys. So that was kind of informally, still in. And then that's actually one of the reasons this turned into a business for me afterwards. And now I have a small team here in San Diego, but to better service that, because I'm sure you have seen there are a lot of people who are very good at targeting military and veterans, but there aren't a lot of people that are good at actually serving them. So I saw that kind of was frustration I saw right away, and really spurred me to kind of get more involved and start this. And it's turned out to be great. It's turned out to be fun. But now my passion project of that side of it kind of funds my passion project to educate on exactly that, what we're talking about, leveraging these entitlements that these guys have earned. These guys and girls have earned these things that sometimes they just don't know how to utilize, and just kind of getting them started on that, educating on how to get going, and also kind of a little bit of a financial mindset. As you know, we get our pay stub as an LES, right? So leave an earnings statement, and it's broken down into pays, allowances. So you have a housing allowance, and a lot of people look at that as that's how much they're supposed to live on. That's as much as they can spend, or they're supposed to spend up to that. And it's just an accounting method, and if people quit looking at what the military breaks their pay down into as an account, look at that as an accounting method, and look at overall what they can afford, what they can't afford, what their goals are. I think it really changes the perspective and helps them build that roadmap of where they want to be and get off on the right foot.
Yeah, I agree with you. And I find probably the most passion driving part of me being in the mortgage business is that education piece, like you were touching on, is really teaching these guys and gals what an opportunity they have and how to use it, right? Because if they've heard of the VA loan, or they've heard of buying real estate, it was from someone that works in the same shop as them, who heard it from their dad, who heard it from his friend. And there's a lot of misinformation, but there's just so much unknown that it's I heard of it, and I'll buy a house one day. Yeah. Maybe when I get out of the military, and it's gosh, you're in such a fortunate position that you PCS pretty regularly, right? Mm-hmm. So you're moving, so you've got to have a place to live in all these new locations, right? Whether it's on base, an apartment, or you got to live somewhere,
right?
And on top of that, you get tax-free money, the BAH, it's tax-free.
Right.
To pay for a house.
Mm-hmm.
So, and then the government on top of that gives you a tax break for your mortgage interest.
Right.
And then on top of that, real estate is an appreciating asset. So you've got these really compelling reasons why, you should be buying it. And then I think where it benefits them is finding folks like you and I, where we can teach them. It's not buy the biggest house everywhere you can go, right? There is a strategy at play here because, and you kind of touched on this, you can use the VA loan multiple times. You can actually have more than one VA loan at a time active.
Right.
But there's some math that goes behind that. There's a little bit of a strategy. It's not, even though they removed the county loan limits for, starting this year, that doesn't mean that it's just a free for all and you can go buy $1 million houses, 0 down all over the country, right? So there is, some math limitations in figuring out entitlement calculations, but there really truly is a strategy. And I think, I did some homework for a presentation I did. And if you look at kind of a 20-year career in listing and, bouncing from different base to different base, and you total up the BAH over a 20-year career, I think today, depending on where you get stationed, of course, it varies a little bit, but you're looking at somewhere around $750,000
right.
you'll receive over that period of time to pay for a house. Now, granted, your first few years enlisted, you can't live off base, but once you get to be able to be at that point, call it 700,000. That's $700,000 to be applied towards a mortgage, which is paying the debt down and appreciating value and all the things we talked about. Over time, I mean, that's incredible.
It is.
Nobody else gets that.
No, it is. And it's a phenomenal opportunity. I mean, and like you said too, every time you transfer, that's just a new opportunity. It's not really, it can be a little bit of a hassle, but it is a new opportunity. You're in a new market, a new place, a new opportunity to make more money. And with it, I mean, gosh, that was my initial plan. Accidentally, the first one, I bought the first one, just I needed a house, bought it. But then when I transferred the first time and got my first rent check from someone else, that's when the light bulb came in. Cause it was not a grand plan of mine. I wish I could say like, I knew what was going on. I had no clue. I just bought a place. And then when I transferred, got the other, and I got that first rent check, and then the light bulb came on. I'm like, wait a minute, like they're paying my mortgage and I'm getting money. This is pretty cool. And so that was my plan, to just do at least one per transfer, as long as I was in. I didn't know if I was going to stay or not, but yeah, it's a great way just to accumulate that. And if you know how to leverage and strategically refinance, there's just so many things once you dip into it that it's just a game changer for people. It gives options. And going back to me staying in for so long, I think one of the reasons I did was because of some of these investments, even though they weren't huge. These weren't taxing me really, but always having an extra income, because it just kind of made you never feel trapped. So when you're staying in, you could just do two more years, and knowing that you can leave basically at any time, and you're not stuck like, hey, I can't afford to move on. I can't afford to take a chance on that, outside world, like we would put it. It's just a totally different mindset when you don't have that stress. And I think that would really benefit a lot of our people as well, just being able to alleviate that financial burden,
Yeah, no, it totally is. And I wonder, if you run into it, I still, with so much information at our fingertips for us too, military people, us, you can find out a lot of information on so many different topics on the internet, right? So I still find it surprising, run across realtors that don't know that the VA loan limit was removed.
Yeah.
Almost 6 months ago now, like some of this stuff, it just kind of, do you run into that too? I mean, in running into with transactions with other realtors and stuff?
I do. And to some of their credit, like I've had agents who will ask me from the other side, because they may even have another client that's doing VA, and they'll actually ask questions because they want to be more experienced in it. So I'll give credit, that's phenomenal, but a lot just don't. And they're really ignorant to really what the process is. And they're scared of VA loans. They're like, oh, well, why don't you talk them into, I literally had someone, why don't you talk them into resubmitting the offer conventional? I'm like, what sense would that? I'm like, you clearly don't understand the benefit of this. You know, it's just ignorance on their part. And so, you know, so be it, that's fine. But the thing that really bugged me the most, again, when I was very first, you know, starting in the real estate side as like, you know, kind of career, but once I got licensed, I'd gone to one of the military relocation professional classes with another agent friend of mine who's a civilian, you know, his whole life, and just said, hey, why don't you come with me? And I got so frustrated in this class. The facilitator, she wasn't putting out bad info. It's really just introduction to a lot of things we're talking about. Right. But a lot of the agents that were there to get the certification were either military, maybe just did a couple of years, or a spouse of someone in the military. So they only have that view, you know, they only have the view from, you know, once removed, and then you only have the view of how much time they've been or what commands they've been at. And we're, you know, just giving information out that people were absorbing, saying like, hey, well, if this person's an E4, don't talk to them. They're wasting your time. They can't even get out of the barracks. This person, you know, they're not going to be able to do this. And it was all just such coming from kind of our own people. Yeah. So that was kind of frustrating as well, that just so many people aren't, you know, it's like throwing the veteran tag on, like, oh, I'm this veteran, but I haven't really done the research either. I just want to kind of use that. So that was a frustration too, because we're not helping our own people at that point.
Right.
But then for all of those, there's some really amazing people, you know, that do try to educate and, you know, help people along, make the right choices, make smart decisions, you know? So there's good and bad, but I don't think most of it's malicious. I think it's just ignorance on the programs and entitlements that there are.
Yeah, I think you're right. And it's surprising. Like when I get into conversations, so oftentimes what I do after I like pre-approve a veteran or something is I'll call the listing agent and explain to them, you know, what we've done to come up with their pre-approval and so forth, give them a little confidence in it. And I've had some agents too, you know, I can sense in the conversation that they're not quite comfortable with the VA loan part of it, right? And you know, if I had said conventional, they would have been like all warm and fuzzy inside. But I said VA, and you could just sense they're a little uneasy. And you know what's interesting statistically is, and I share this with some of them in some conversations, is the VA loan has the lowest foreclosure rate out of any loan type on the market, and it also has the highest average credit score of any loan type on the market.
I didn't know that.
So yeah, I mean, now when you're going, oh, well, I'd rather have conventional. Well, why? Like it's a riskier borrower oftentimes. Right. You know, even though there's a down payment requirement, you know, the VA is guaranteeing this loan for 25%. That, right. I mean, that's probably a bigger down payment than what you're seeing on that other conventional offer, you know, and it's one of those things. It's like, you know, this person raised their right hand and said, hey, I'll give my life for this country.
Right.
All I want to do is buy a piece of it.
Yeah.
And I got this really cool tool that no one else gets to use, and you're afraid of me using it.
Right.
And it just, you know, we start getting into some of that conversation, and it's just like, you know, like mind blown a little bit. They're like, oh, okay, yeah, all right, you know, like,
right.
Really, you can hear the gears grinding almost on some of that stuff.
You probably save the next guy down the road some pain too, but you know, but add a little education, you know, and then it starts to sink in, and the next makes it a little easier for the next person coming along. So yeah. that's pretty legit too. Yeah, it's pretty phenomenal, really. I know when you were talking about the loan limits as well, and are you seeing more people taking advantage of multifamily properties? Because that's something when I have, especially, you know, again, anyone coming into like, hey, I know I may not be able to stay here long-term, you know, I may only be here for a few years. What can I get into? And if, you know, if it fits their needs, like I just feel like, especially with the loan limits gone, the multifamily is just phenomenal. And they just don't realize that they can use the potential rental income as qualifying factor.
Totally. Yeah. So I advocate a lot with my military buyers, to, you know, unless they have, you know, family needs that preclude them from living in a multifamily. But, you know, if they're, you know, a young married couple or they're single, I think a multifamily is a brilliant move. because you have multiple units, 1 to 3 units paying you rent, and you can qualify using it. I think it's such a smart way to go. And I have seen an uptick in applications for that with the loan limit gone, because you look in, our area in San Diego and a lot of California locations, multifamily homes are very spendy. I mean, 7 years ago, investors bought all those super cheap. So if you're buying it today, it doesn't have a cheap price tag with it, but the math still works. And so, yeah, they can qualify using 75% of the rent from the other units. There's a couple little catches though. You got to have some reserves, and you either have to have property management experience or hire a property management company. So there's a couple little hoops, and they're usually not deal breakers. I mean, most people have got some money in their TSP and stuff like that. So usually they're fine, but I've seen an uptick in it, and it's great because before that down payment was the precluding factor. It wasn't necessarily debt ratios because of the income rental qualification and stuff, but it was that down payment piece. And, in California, you're looking at, a 7-figure unit oftentimes. Yeah. And, when you start doing multiples of $1 million, the math gets big, right? So, having the 0 down payment's been really good. I mean, I'm in escrow on a couple of pretty expensive multifamily, and that's exactly how we're doing it, right? We're using the rental income from the other units to qualify, and it's going to turn out long-term down the road to be an amazing investment.
Right.
And, when they PCS again and they move out of their unit, and now they've got 3 or 4 units all rented out, the mortgage is covered with 2 of the units' rents.
Right.
So now they can use the extra rent and put it in the bank to put a down payment on buying something else at the next duty station, or they can aggressively pay down that mortgage. I mean, with how low rates are right now, they're almost better served just banking, put all that in savings.
Right.
So in 2 or 3 years or 5 years, whenever they move again, they can go do a down payment. Because they took out so much VA loan here, they're probably not going to have 100% VA next spot. But they can go put a down payment, do a conventional or an FHA loan or different type of financing, and get into something else. And it could be a multifamily in a whole nother location,
Yeah. And I think people, and it's hard to do, especially when you're younger, to think far enough ahead to realize how quickly properties often appreciate. Like at 5 years, I know when I was like 23 or 24, I didn't think 5 years ahead. That wasn't kind of anybody's thing at that point. But just even 5 years can make a huge difference in that appreciation. And it's just like growing. It's like a set it and forget it investment account, is really what it is. And looking back on it, then I've heard many people, including myself, saying, I wish I'd purchased more, but I've never heard someone say, I wish I hadn't purchased that property,
Yeah, I haven't heard that one either.
Yeah, for sure.
Yeah, and I tell even, and so not everyone, multifamily doesn't fit for everyone, especially, if they have family and kids, and sometimes the circumstance doesn't allow for it. And they come to our market, San Diego, and especially if they are from, a Midwest town or something like that, and they see home prices here, I mean, their jaw hits the floor. It's scary. I mean,
mine did when I got here.
I mean, you got to spend over $500,000 to buy a family home in our area. That is scary. There's definitely some fear there. And part of my rationalization to that is the BAH is still covering the majority of that mortgage.
Right.
So they're able to make it work. It's just a scary number, right? But what I tell them is, when you guys PCS out of here down the road, 3 or 5 years, that home may or may not make a good rental.
Yeah.
But if it doesn't make a good rental property, you can sell it. And even at a conservative rate of appreciation, your multiplying factor is this $600,000 base.
Right.
So even if the appreciation isn't 22%, which it was years ago, if it's something conservative like 4 or 7 against an asset of $600,000 or so dollars,
right,
the math starts to look pretty nice.
Yeah.
When you sell and you have this nice big check that you can roll into maybe buying the next house and a couple investment properties, right? And it could springboard the whole thing.
No, 100%. Yeah. And it's and again, it just goes back to a lot of people not having that information or that financial mindset. They haven't been, you know, I haven't seen it. An analogy I use a lot when, especially that when someone gets in there like, hey, I'm up for promotion, I might get transferred in like a year. I'm afraid to buy something now. Or, hey, you know, like the C tour might get cut short. You know, if I get transferred and I buy this and I leave in a year and a half, you know, let's do numbers and, you know, go over numbers with them. They look and go, well, I'm going to be upside down, you know, however much, like say $300, like, because they base everything on either the mortgage or their BAH, right? That's just how it goes. They're like, oh, well, I'm out of pocket $300 a month. And I'm like, okay. And then when you're going to this other place, and I always ask, well, if some stranger would put $3,000 in like an investment account for you, like an IRA, would you put 300 in if they'll match 3,000 to your 300? And like, yeah, that's ridiculous. And like, that's what they're doing, dude. You know, like that's what they're doing. They're paying $3,000 rent. You're putting 300. You're getting the equity in your home. You're getting the tax. You'll probably get more than that in the tax break of that being an investment property now. You know, so once those lights hit, though, I think people then start just thinking on their own. Once it just triggers, they start thinking on their own ways to generate some income from these tools. So, and it's pretty cool to see, isn't it? Like when it does hit, and you see it in someone's face, you're like, okay, cool, they've got it. It's going to be okay for them, you know?
Right. Well, and then it opens up kind of a whole nother wormhole here of like house hacking, you know, they're going to have friends or buddies on base who are not even in the thinking realm of buying something, but they need a place to live, and they'd be happy to rent a room for $500 a month or whatever, you know, the rent is. And now that $300 in your example, they're profiting on that $300. I mean, you know, they rent out 2 or 3 of the rooms and half the mortgage is covered.
Exactly. And they would be doing that anyway, because half the time that's what everyone's doing to get into a nicer apartment. You know, they're teaming up on that too. So yeah, no, absolutely. There's so many ways to generate that income.
Totally. Well, I was going to ask you, so we're, you know, the time of recording this, it's, you know, we're starting to loosen up some of the stay-at-home orders from the COVID thing. So, you know, I know the whole COVID thing, the stay-at-home has definitely changed the dynamic of our industry as far as just being able to go to homes, you know, and see them, or, you know, hold open houses, you know, some of the, you know, knock on doors, which is, you know, something that it was very normal in our industry 60 years ago. And so a lot of that has changed. But one thing that I've noticed, and I wanted to get your take on this. So one thing that I've noticed is I have seen purchase business very steady, if not upticking a little bit.
Yes.
So, you know, been in several multiple offer scenarios. And so there's still a lot of buyers out there trying to buy homes. But and it seems to me, and I've seen some statistics, that inventory is still low. So that supports a strong housing market. So I'm seeing a lot of stuff like in the contracts, like shortening contingency timeframes and stuff like that to make the offers more appealing to the seller and so forth. What are you seeing? Are you seeing some of that stuff, and how are you navigating that?
Yeah, I am seeing some of that, and honestly, we do that normally anyway. And it's not just for the strength of an offer, but I've just found, you know, if it suits our clients' needs. But I found that people just do their job better when they're on that timeline. If there's a 30 or 45 day time, people wait until the last minute, till a contingency period, till, you know, escrow is going to start working the file at the time they need to work the file, because everybody's busy. So I found that, like, if we shorten things, people just do their job quickly and get it out of the way because they know it's coming up on it. And then, cool, if we're sitting waiting just for them to get a key, that's cool. So we kind of do that as a habit whenever possible. But I am seeing people attempt to do that. So people that I think have the systems and structures in place and the right connect, you know, they have good relationships with their lenders, good relationships with their inspectors and things like that, are able to pull it off. But I have seen that quite a bit lately, especially, yeah, by lately, I mean like in the last probably 14 days, because I feel like that's when we've really started to pick back up.
Yeah, I agree. And one of the things I was just talking with my escrow rep before we started this today, and we were talking about the appraisal contingency time frame. And for people that aren't familiar with that, it's fairly specific to California real estate, but there's, within the purchase agreement, there's a window and designated by days in the contract of when that appraisal, inspection, or report has to be turned in. So oftentimes a lot of that pressure falls on the lender because we're the ones that order it, even though we don't employ appraisers. But my escrow rep and I, we were talking about kind of the timing mechanism of this, and what's interesting, I'm always championing for, my buyer's agents to fight for picking title and picking escrow. And I know that that's kind of a losing battle because 99% of the time the listing agent wins that, if it's even fought over. But 99% of the times the listing agent picks it. But what I've seen recently is they want to tighten up that appraisal contingency time frame, and then the listing agent picks their own escrow and title company who work really, really, really slow.
Right.
And so it causes this traffic jam, day one, right? And so, she and I were just, kind of brainstorming back and forth on, how critical it is when we're starting to really crunch that it's not like there's other rippling effects in other places it needs to change also.
Yes.
Right. I had some ideas on how to address that, but has that come across in any of the deals you've put together recently, or how have you kind of addressed that?
We've had a couple nothing terrifying recently, but we have bumped into that in the past. And usually we kind of put it back like to them of, we can show like, hey, our lender's on point, our because the biggest one really as far as shortened contingencies to me is the inspection contingency, because people want to know what they're into it for, right? Like what kind of repairs. So we'll knock that out quick. And then if our lender's waiting on stuff, or if our, like they were waiting on their appraisal and there's some, any other issues, I kind of just put it back on them. It's like, if you chose you chose these assets, you chose the escrow, because escrow, that's the big one. And a good escrow team, they will save anything. And then, but that can also be the biggest hurdle in the whole transaction, right? So, they chose it. I just like put it back on them. Like, hey, you're holding this up. Let's get this rolling. And I haven't had anything fail because of that, but we've had to definitely put like kind of the feet to the fire on a few of them. But then there's been a couple times where we've worked with people like, oh my God, these people, like, I'm glad they chose, because it just exposed us to another phenomenal team,
Right.
So that's, I guess the flip side of that, you meet some cool people on the other side as well.
Yeah. I've met some really great escrow teams and stuff that are really fast. And it's funny, it's funny to see, we have these VA offers with guys coming in needing help with closing costs and stuff. And then we get this escrow agency in there that's 2.5 times more expensive than everyone else you've seen. And I'm going, man, how do we keep running into these hurdles everywhere,
Exactly.
But just the nature of the business.
Did you, on the, you're talking about the conventional, and did you see much of, because I know we had some really good fortune for a couple of our buyers that stuck it out, like when COVID just first started. We actually put an offer in the night that, the governor basically announced the first lockdown. And then, everything went kind of haywire the next day, right? That's when rates were nobody really knew. Stuff was just everywhere. And so we already knew there's multiple offers. Well, all of a sudden this VA offer with almost no earnest money deposit and stuff going against these others, they're calling us like, hey, can they close this? Because, your guy has a job, and so that really, it was really a pretty cool thing. But the crazy thing is rates changed, suddenly we're like, hey, well, we'd have to buy down the rate now, but he could definitely close it. So we got like 20,000 credit back for this young couple. And then of course the rates balanced by the time we closed. So they ended up pocketing so much of that, for covering all the stuff. But kind of back to your thing of like the knowledge of knowing the VA loan and stuff, all of a sudden, we it wasn't just that one, a few other deals. Now the VA loan was more favorable because they knew, hey, these guys, the loan's guaranteed and these guys have a job, on the active duty side. But so that was kind of a nice, I guess if you say a nice little repercussion.
I've seen some of that too, because obviously as a result of the COVID thing, there's been some tightening in the lending world.
Right.
And one of those things that has tightened is verifying employment, which rightfully so. I mean, we're in such a weird time from an economic standpoint that, lenders, they just have to double, triple check, right? We just got to make sure before we cut that check to buy this house that we're going to get paid back,
Right.
And that's the driving force behind it. But yeah, I mean, the active duty people, they're not getting laid off. They're not getting furloughed. They're not getting hours cut. I talked to a lot of them who aren't going to base and they're kind of chilling at home for a couple weeks, but
Still getting paid.
and they're working on house projects, which is nice, but they're still getting their full paycheck, right? They're still getting their full BAH and their full pay for their grade. So yeah, that part has been nice. And it's funny. I was doing a cross qualification for an agent I work with, and they had a couple offers come in on a home, and there was two of them that they really liked, and one was conventional and one was VA. And they're really leaning towards the conventional one. Again, it just feels more warm and fuzzy to a lot of agents. Like, oh, I really like the conventional one. So we dug into it and we got into all the details of the file. And that conventional one was using just every penny of this person's income and overtime and all this stuff. We had the VA one that was LES, BAH, slam dunk, easy peasy. And when I brought it back to him and said, okay, here's my review. If, man, the verification of employment or the paycheck alters, I mean, even a nickel, they're razor thin on this conventional one, even though it sounds prettier because they have some down payment.
Right.
Like, this one over here is netting the seller the same amount of money.
Yeah.
And it's going to fly through, no issues whatsoever. But this one is a crapshoot. You guys let me know what you think, but I would pick the VA if it were my choice.
Right.
And you're like, oh, yeah, we never thought about that. I'm like, guaranteed money. They're not, there's no overtime to worry about. There's no bonuses. It's steady pay.
Yeah, absolutely. And there's another benefit of having someone you can trust to bounce the things off of too. It's always good to have that.
Yeah, it's always about your team. And I tell that with the clients too. And I'm like, you need to assemble a good team when you're buying a house, right? Absolutely. It's not only the realtor. It's not only the lender. It might be mom and the realtor and the lender. It might be your accountant or your financial advisor and the realtor and the lender. But all of them need to be hand selected.
Right.
Based on your trust of them to get the job done the right way for you. Mm-hmm. Right? Cheapest price never gets you the best result. And, I advocate that quite a bit because, we have probably too much at our fingertips because of Google, right? Like, there's so much information out there that all you have to do is, a couple words search and you can head down a rabbit hole for hours, right? And just gets overwhelmed with information and it can create some fogginess in decision making. But I always beckon people to go back to, who is it that you trust is going to do this for you? Because you saw some clickbait online or a friend told you to go here because it was cheap. Mm-hmm. This is a big deal. Like, we're not buying a Samsung at Best Buy.
Right.
This is kind of a big deal. So I would suggest we get people in there that you really trust. And if it's not me, that's okay. But you need to have someone in there that you really trust is going to drive this home for you, because, it's not just calling Best Buy versus Costco and getting them to fight over the rate on that big screen. I mean, this is a different deal.
Yeah, absolutely. And that's a huge point. And that I think I struggled with that in the beginning, was recognizing that sometimes you just can't, people want that deal and stuff. Sometimes you just don't need to take that, or don't work with that one. They're not going to know until they find out the hard way, or whatever the case is. But a lot of times you can educate them, they'll understand. But you're absolutely right. Unfortunately, I'm sure as you see it too, a lot of times we see that on the other side of the deal, and you can see the some of the warning signs going into it. Sometimes, especially like if you're the buyer side, and the buyer commission, is like pretty substantially smaller than normal. Then you're thinking, okay, they've already taken this on a pretty big discount if they're doing this. And then usually their I guess performance shows too, and it's kind of frustrating for everyone.
Yeah, it's funny. If going with the least expensive only came with this big asterisk.
Yeah.
You're gonna pay for this.
Yeah, you're gonna pay one way or another.
maybe not in dollars up front, but somewhere along the line, you're going to pay for this choice. If only they all came with that big asterisk, I think it would set
Yeah.
people.
Yeah, that would be good. Yeah. I wish we had that.
I know, right? Well, we're headed into, this hopefully more of a normal economy. And I know housing is a big worry for people, right? Because, the most recent memory of any kind of big economic issue was, the housing crash of '08. And, and this doesn't look anything like that. I mean, there's so many different factors and stuff, and the housing market still looks very strong. There's so many differences between then and now.
Right.
So what is your outlook going forward on the remainder of this year in the San Diego real estate market? What would you forecast if you had a crystal ball to kind of tell us what the rest of the year looks like? What would you say?
Honestly, I think it's just going to continue to pick up. I think it's actually going to, and I mean that. I'm like actually closing on another place myself in 2 weeks. So I went into escrow at the beginning of this, the COVID thing, and I went with it because I believe it. I just believe that we are in a very different place from 2007, 2008, and I do see it continuing to grow. And another thing, on the VA side, the veteran side, we're about to, they've withheld PCS for 3 months now. And once that comes, we're probably going to get a surge of up to 30% more than we normally would at that time frame. We always get the spring and summer surge, but it's probably maybe 30% higher because, you've got 4 months of no one by then, 4 months at least of people not transferring. That's all going to hit here in a short period of time. And that's, again, back to the supply and demand you're talking about. If people don't start listing their houses, that's a lot more people looking for housing. So, both on the landlord side and on the seller side, that's a, pretty substantial high number of people coming in needing housing. So, I think that's going to get a pretty big push whenever that finally does happen, which will carry a few of those months. And I think that will really just kind of push us through this year, at least into the late fall.
Yeah. Yeah. And I actually just read an article last night on military.com and there was, I guess yesterday was just kind of released to the public that the military is now allowing PCS orders in kind of a priority fashion. It hasn't been launched yet, but in a priority fashion, they're now allowing people to start making those moves. In fact, one thing that might be of good note for any military members listening to this is when you move on your own, rather than having the military move for you, usually you were reimbursed, I think about 95% of those move costs. And they're now going to up that, I think, to 100% of those move costs because of all this. So it's coming. And I think, in our market specifically, I agree with you. I think we're going to see quite a bit of activity for people trying to buy homes. Number one, there's no down payment anymore in San Diego. It's high priced. Interest rates are all-time low. Record lows.
Crazy low.
It's insane how cheap money is right now. So they can afford more, right? That VAH dollar stretches a little bit further than last year. And San Diego is arguably one of the most densely populated military metro areas in the nation. So we're going to see a big influx, I think, of home buyers. And then, of course, there's all sorts of ancillary and support businesses that benefit from that, which means more people are going to be buying homes behind, some of that movement. So I think that we're going to have a really strong fall season. I think it's going to be pretty great. I think interest rates are going to stay low through this whole year. And we'll see how the election goes. That might have a little impact on rates, but I think we're going to see great low interest rates to the end of the year, maybe going into the first quarter of next year before we start seeing much in the way of them changing for higher. But I think it's going to be a gangbuster year. And more to kind of the point of our discussion here is, more and more agents need to be comfortable with the fact that they're going to be receiving VA offers on a lot of the properties, especially with inventory as low as it is. It's just the rule of the numbers, right? It's a numbers game, and you're going to see more and more VA. And I would just encourage, any agents out there, that are looking or listening to this to be more open-minded on the VA offers that you get. It truly is a benefit, and it's a great loan. It's not worse. In fact, it's probably a better buyer oftentimes than some of the conventional ones. So I would just encourage people to be more open with that, because we're going to see a big influx, and our military men and women, they need a home. They need a home for their families, and they're going to need it here in San Diego.
Absolutely.
Awesome. Well, Jay, I want to thank you so much for being on Armed and Ready with us today. If anybody is looking for a great realtor to help them with their purchase or their PCS move, Jay Johnson can help you. And where can they reach you, Jay?
They can reach me at just online at landingcollective.com, or you can reach out to Jay at landingcollective.com for email. And glad to help out anybody who needs it.
Awesome. Yeah. And if anybody has any other questions, needs to get a hold of Jay, wants to talk about some VA loans, you can reach me at valoanguy.us. Like we mentioned, it's all about building your team, right? You got to find people that you know and trust to get the job done for you the right way, to help you through the process. And we'd love to be your partners in that. And we thank you again for stopping by and checking out this episode of the Armed and Ready podcast. We'll check you out next week. Take care.